Did you know your bank makes a tidy sum off the money you save, but pays you way less than it could? Let's break this down. First, let's get clear. When you deposit $100 into your account, the bank doesn't just sit on that cash. They lend it out to other people at a much higher rate. Imagine your savings as a tree that banks prune for profit. The branches they cut off are the loans they make, and you're left with just the leaves, your interest earnings. Now, here's a common misconception. Many think banks pay high interest because they're generous. In reality, it's all about covering their operational costs and risk margins. Let's do the math. If you deposit $1,000, a typical savings account might pay 0.5% interest annually, earning you just $5. But here's where it gets interesting. The bank could lend this money to someone else at an average rate of 4%, making them a neat profit of $35 from your initial deposit. This is why understanding how banks operate can help you make better financial decisions. You might consider other investment options to maximize your earnings. Remember, this video gives a general overview of banking practices and isn't personalized advice for your situation. Always consult with a financial advisor before making major decisions. Subscribe and unravel more money mysteries that banks don't want you to know about.